Hey everyone, Dave Keller here with Market Misbehavior. One of the things that comes up a lot looking at price charts is what's called a bullish momentum divergence, where price is going lower, but a momentum indicator is actually sloping higher. Today, we will define the bullish momentum divergence and look at some examples of some recent buy signals. So today, it's all about the bullish momentum divergence. So when I introduce the concept of technical indicators and we look at derivatives of price, ways of measuring price momentum and trend and other things, and quantifying that as a data series below the price chart, we're talking about a number of different things. The basic buy and sell signals, but also when you can get what's called a divergence, where the action in the indicator diverges or does something different than the action on the price series as well. A lot of times, a momentum indicator can be a bit of a leading indicator for price because changes will emerge in the momentum characteristics before the price actually reverses trend. We're going to look at some examples today, most recently with Constellation Brands on a successful bullish momentum divergence that you saw back in mid-September. We'll look at how the price reacted going into or performed going into that signal and then coming out of that bullish divergence through where we're at here in mid-December. Before we get to the chart, if you like this sort of thinking about investor decision making and better routines using technical analysis, I hope you'll subscribe to my channel. Also give the video a like if you appreciate it. We'd very much appreciate that back. Finally, put a comment below the video. Do you recognize any other bullish momentum divergences out there right now? Let me know in the comments below. Let's get to the charts. All right, so here we're looking at a chart of Constellation Brands, ticker STZ. This is in the Distillers and Vintners groups inside of Consumer Staples. If you start the clock back in mid-September of last year, take it to mid-September of this year, you can see that we bounced off a low in late October of 2020, rallied up from just below 160 to just below 240 up here in early January. We had a couple unsuccessful attempts to get much above that level, just above 240, and from there started to rotate lower. And this is where we check in with Constellation Brands, going through this pattern of lower highs and lower lows. Now, you'll notice here in, let's say, June of this year, you broke down through the 50-day moving average. It's sort of a negative sign. Also went from making higher highs to stable highs to lower highs, which is a sign of a stock and distribution phase. We finally broke the 200-day moving average. So at this point, pretty much everything is telling you that the stock is not doing well, particularly the relative strength, which is continuing to slope downwards, telling you it's underperforming the S&P 500. Look at what happens here from mid-August to mid-September. And here we're looking at the daily open, high, low, close, the two moving averages. I have some Fibonacci retracements I'll get to in a second. This is RSI, which is a measure of momentum, price momentum. And at the bottom, it's the relative strength. How is this stock doing relative to the S&P 500? If you look at the two purple lines here, you can see what's called the bullish momentum divergence. June, July, August, September, the price is making lower lows. So every time we have a thrust downwards, it's undercutting the previous low. Now, if you look from August into September, when we have that lower low in price, look at how the RSI is actually making a bullish momentum divergence. Here in August, the low, we can see that the stock's oversold. Here in early September, we see that the momentum is less negative, right? So it's above 30, even as the price is making new lows. So that is the idea of the bullish momentum divergence, price going lower, momentum indicator going higher. What's interesting about this particular example is that it lines up with a Fibonacci support level. If you're not familiar with Fibonacci retracements, I'll put a link in the description below. Check out that video because it'll explain a little bit more about what I'm about to describe. But if you look at the low from August of 2020, the high from January of 2021, you take that as the framework, you can see that after that initial push higher, and when we pulled back, we bounced off the 38.2% level a number of times around 207. We stayed well above it for quite some time, but now we're right back again at this level. So this 38.2% retracement is basically retracing that percent distance between these two extremes. What's interesting here is it also lines up, of course, with lows from January and February. So we're bouncing off of a similar price level where we found support, and it's also at a Fibonacci support level. So the fact that you have a bullish momentum divergence at those at the level which has meaning using price support levels and also Fibonacci retracements even more significant. If you look at what's happened, this is in mid-September. Here we are a couple months later in mid-December. This is where we stopped the previous chart. You can see from there we bounced off of the 50-day. Bounced off the 38.2% level there the third week in September. From there, things started to change. We went from making lower lows to higher lows, from lower highs to higher highs. We had been below the 50-day moving average. We rotated back above. We had been below the 200-day moving average. We finally broke above. So all of those indications rotate higher. The relative strength starts to improve on the bottom. But the first early warning sign is this bullish divergence August into September. That's what's most interesting, I would argue, about the bullish momentum divergence. I always try to tell people momentum investing is trying to do three things. Number one, identify trends. Number two, follow those trends. Number three, anticipate when those trends are exhausted. The first two are fairly straightforward. You're looking for stocks showing strong trend characteristics, but what do you do when things start to turn negative? Or if you have a stock that's going lower, like we saw with Constellation Brands, what would help you anticipate that downtrend is exhausted? By looking at a bullish momentum divergence as we reach key support levels based on whatever methodology can be a very good approach. If you're looking for a current example here in mid-December, AMGN might be an interesting one to look at. This is a stock in the healthcare space. It's a big biotech name. We can see not an ideal bullish momentum divergence, only because the price really was really relatively stable. We undercut from the October low to the late November low. It was a little bit down, but I mean, a fraction relative to where the stock is trading. It really was more of a consistent support level. But the idea is the trend is going one direction. The trend is still down here, but the momentum is going up. And ideally, I should point out, it's best I've found when it's oversold on the first side and then it's not oversold on the second one, because it tells you that the initial thrust lower is significant. On the next thrust lower, where the price keeps going lower, the momentum is actually less negative. And again, that's more a sign that downtrend pressure or downward pressure is exhausting. Buyers are coming in, sellers might be having run their course. And because the momentum is going higher, it tells you there's less and less urgency below that selling. Now, to be clear, you can flip this sort of chart over and you get what's called a bearish momentum divergence. Unfortunately for the broad market, the S&P 500 is a pretty good example of that. Here, I've highlighted some of the bearish momentum divergences with the blue dashed lines going back here. You can see we had one in January into February when the price was going higher on lower momentum. We pulled back about 6% at that point. April into May, we had another pullback there when we had this bearish momentum divergence. This one in July did not work particularly well. You had a very brief pullback, but continued to push higher. And that right there, where you see the momentum rotate back and break that pattern of lower momentum, is what tells you that the uptrend is probably still in play. Here we have that same example. It's similar to the chart of AMGN flipped over, right? So the S&P made a new high in the earlier first week in November. From there, we've basically retested that resistance level a number of times. We've had a higher close or two, but not by much. So overall, technically, you have a bearish momentum divergence with the price overall going flat to positive, but the momentum clearly negative. And again, the key point here is overbought the first time and oversold, and less overbought, not overbought. Overbought on the first attempt, the first push higher, but on subsequent pushes higher, less and less upward momentum, suggesting an upside exhaustion. So that is what a momentum divergence is, particularly the bullish momentum divergence that we saw earlier with Constellation Brands. We're seeing now with AMGN. So there we go. That is the bullish momentum divergence. And I should make a couple quick comments here. I used RSI as the example because that's the oscillator that I tend to use most often. But you can use this concept of divergences with many momentum indicators, things like MACD or PPO or any of those sorts of things. Certainly a very similar approach to the one I described here. You can also look for divergences in other things. So we'll talk about breadth divergences, volume divergences. All of those have a similar idea, but subtle differences. And hopefully in future videos, I'll address some of those. I hope this thinking about bullish divergences, how they fit into your overall methodology, I hope that's helpful for you. If you like this sort of thinking about technical analysis and analyzing the markets using visual tools, I hope you'll subscribe to my channel. It'd be great to have you along this ride. Also, give the video a like if you appreciated it. We'd very much appreciate that back. Finally, put a comment below the video. Have you found bullish divergences to be helpful for you? Yes or no? Tell me why in the comments below. From everyone at Market Misbehavior, I'm Dave Keller. Have a great night. See ya.